Biz2Credit webinar on Women-Owned Business Outlook 2016. We're handling this today on International Women's Day. This is an auspicious day. My name is Anita Campbell. I'm the moderator, and I'm here with Karma Hara. She is the Vice President of Strategy and Business Development for Biz2Credit. We'll be beginning the webinar in just a moment. I would like to mention that if you have any questions throughout the webinar, if you would like to place your question in the chat window that you see off to the right, just put your question in there and we will try to get to questions at the end. We're going to allow some time for questions. We also have questions coming in through Twitter and other places, and we'll include those questions as well. I would like to introduce at this time Karma Hara. She is our guest speaker. She'll be covering the results of Biz2Credit's 2015 Women's Small Business Finance Survey. And even though it is called 2015, it's actually just been completed recently. It's based on 2015 information. She'll also be talking today with tips about improving your creditworthiness and things to be mindful of when considering small business loans and applying for loans. Welcome today, Karma.
Thank you, Anita.
This is going to be a great webinar, and so we'll try to keep this conversational. We'll go through the information. I may have questions throughout. I'll interject them as they come up, and we'll try to give due consideration to this very important topic. Just a little bit about me. I run a media business called Small Business Trends. We reach more than 2 million small business owners each and every month, more than 10 million annually. I write across the web on small business topics. I've been in this business now for, it's actually in our 13th year, and we live, breathe, eat, sleep small business in my company, and we also are a small business as well. But we are like a magazine, and we publish information, resources, guidance for other small businesses. Our audience is completely targeted towards small business because that's all we cover. We don't cover anything else, and we define a small business for our purposes as up to 100 employees. We know that the SBA and other groups define small business differently, but for our purposes, that's what we consider the core small business, certainly in the United States and Canada, as well as many other countries around the world. And if you look at any of the statistics, you'll find that the vast majority of small businesses are going to fall into that under 100 employee group. Karma, why don't you tell us a little bit more about yourself? We see that you actually are co-inventor of a patent process, which is very interesting.
All right. Well, thank you, Anita. As you mentioned, I'm the VP of Strategy and Business Development at Biz2Credit. And there I really focus on taking the value prop of Biz2Credit and the capabilities of other firms and combining them to bring something new to market. And so that informs a little bit my lens when I think about how women in business want to differentiate themselves in the marketplace, and we'll talk about that towards the end of this webinar. I have a background in business development and product strategy with other companies as well, and I myself at one point was a small business co-founder. It was a technology consultancy where we invented a process for diagnosing. It's very technologically focused, so we invented a process to triage problems with voice and data integration back when everyone was using phones with copper wire in the walls, and everyone first started to bring voice and data onto the same system on your computers. My partner and I were involved in that. And then I am also author and co-inventor of a process patent for aggregating different types of data. And although I'm the author and co-inventor, that particular patent is held by a former employer called Dun & Bradstreet, which many people in the business space know is an industry leader in business data. And finally, I have my MBA in Finance and Marketing from Kellogg School of Management.
Very good. Well, you've got a great background for presenting a study like this with your background in data aggregation as well as your financial background and your background dealing with a platform, because in fact that is what Biz2Credit really is all about. It's a very powerful platform. So delighted to be with you on this study. This is actually the third study that I have moderated over the years with Biz2Credit, and it's always been fascinating data. So delighted to actually dive in. So we're going to talk today about growth of women-owned businesses in 2015, and this is going to be based on actual data. I know that Karma is going to tell us more about that, so I think that's really important, and we'll emphasize that several times today, that what you're about to hear is based on actual data of real small businesses, women-owned businesses, and their experience with seeking and getting funding, financing, all very recent in the year 2015. So this is not a survey where somebody's calling 100 people and asking them what they think. This is actual data. We're going to take a look at that gender gap that exists in small business financing and what's behind it and what we can do about it. And I know Karma has some great tips for us. And we'll just be talking about what's happening in the banking world and in general some other topics related to entrepreneurship and growth. At this point, Karma, I would love to turn this over to you and have you tell us a little bit about what the situation is for women business owners today in the United States.
Right. So more women graduate from college than men in the United States, and that's a pretty well-known fact. We source that information from the White House. Nearly 40% of women ages 25 to 35 have at least a bachelor's degree, and more than 10% of women in this age bracket have some graduate school experience. So women-owned businesses are an important source of job creation in the U.S. economy. The Guardian Small Business Research Institute projects women-owned businesses will create 5 million new jobs by 2018. That's an extraordinary contribution to the U.S. economy. 1/3 of the 15.3 million total new jobs anticipated by the Labor Department. It's a really big statistic, so I just kind of want to emphasize that. And an estimated 9.1 million women-owned businesses generate more than 1.4 trillion, that's with a T, dollars per year in revenue. So women-owned firms have increased to 68% since 1997. That's a really important data point, and one that's pretty exciting as we, enter a new millennium. And access to capital has been a challenge, though. And so that's one of the things that we're here to talk about, because even though women are true business drivers for the United States, their access to capital has been a challenge. And even though the situation has improved, startup costs of all types for businesses are falling lower at this time, we're still seeing these challenges. So that's kind of what we want to talk about today.
Mm-hmm. And your final point is a really good one, because Yes, it is easy to start a business, isn't it? It doesn't require a lot of money today. You don't need a lot of capital equipment today. The equipment is a lot cheaper. You can get access to software online. You don't need even an office. With today's communication, you can work remotely, all those things. But still, at some point, if you want to grow, you're going to need more capital, or many businesses do. Isn't that right, Karma?
Right. Yes, that's absolutely right, Anita. And I really like what you just said, because many people will say that now more than any other time in history, it's easier to start a business. The economy is really lending itself now with all of the cloud services, like you were just saying, the ability to license software instead of buying it. You don't have to have a brick and mortar business. You don't have to have your own technology infrastructure, but still capital is needed, and we're finding still that women-owned businesses are challenged to get that capital, and so we can talk about some of that a little bit later on in the presentation.
Okay, great. Well, I'll move on to the next slide. So just to carry on a few more statistics here, the information that I'm about to give you is from the American Express Open Women-Owned Business Report of 2014. So American Express Open commissioned a study about women-owned businesses and found that there are nearly 9.1 million women-owned enterprises. And again, we're talking about that 1.4 trillion in revenues. That's certainly a lot. The rate of growth for women-owned firms is a much larger, let's say, rate of growth. Now, I think that what we're really talking about here is a comparison of where women-owned firms were compared to where they are, and that rate is growing 1.5 times the national average. I think that growth also is pretty significant when you compare it to all but the largest companies. It's very impressive. So every day we've had a net increase of 591 women-owned firms. So that's almost 600 women-owned businesses. So, and when we say net increase, we're talking about how many started up versus how many went out of business or sold or whatever they did, closed down, whatever it was. Net, we're still talking almost 600 new ones per day, and an average of almost 1,300 per day just in the past year. So that's pretty amazing. And I think when you look at some of these statistics on here, it's really impressive. Consider also how African American and other women of color now account for almost 1/3 of women-owned firms. So we've seen a tremendous amount of growth there. I mean, I don't know what it is, but there's certainly an entrepreneurial spirit there. I think perhaps some of the immigration has really brought in a new blood, and we know that immigrant entrepreneurs tend to be very entrepreneurial. I don't know if you have anything to add to that, Karma, but I thought that was a pretty interesting statistic there about the women of color being such a prominent part of women-owned firms.
Right. I think that you exactly hit the nail on the head. It has a lot to do with the fact that a lot of people, when they come to, and something that we focus on at Biz2Credit, many people when they come to this country, one of the things that they do is seek to open their own business and start an entrepreneurial venture. So that's actually one of the areas that we really focus on at Biz2Credit.
To be a welcoming environment for those immigrant-owned businesses, right, and business owners.
Right, and one of the things that we say is we like to connect capital to the underfunded, right? And there are ways that we're able to do that through technology.
Just a few more statistics here, or maybe not statistics so much, but just some lists of states. So according to Biz2Credit data that you all were kind enough to provide me, the states with the highest numbers of women applying for small business funding, some of this may not be a surprise to some people because we see some of the most populated states on here. So California, Texas, New York, that doesn't surprise me at all. I don't know about you, Karma, but seeing those on there doesn't surprise me. And we know there's a lot of startup activity in California. But yet some of these are a bit of a surprise to me, or I wouldn't have expected them to be on the list, in other words, such as Georgia and North Carolina. What's your take on this list? Is there any rhyme or reason to why these states have so many women-owned businesses applying for funding?
It's probably a couple of factors. So, it has to do with the types of businesses that are getting opened in some cases. To your point around California, Texas, New York, if we went down further on the list, Illinois, North Carolina, New Jersey, Virginia, a lot of these areas actually have a pretty high technology presence, and so that could be one of the drivers behind it. There are also some other factors. So you and I had kind of spoken briefly offline about the fact that originally we thought, could it be the fact that these are very populated areas? And, for instance, Pennsylvania is the 6th most populated, but it doesn't necessarily rank on the entrepreneurship for women-owned businesses. So some of it, and in that case, in the case of Pennsylvania as an example, its industry really revolves around natural resources, such as steel and oil. So in these businesses that we're seeing here, a lot of it might be driven by the type of business that's being opened. Again, technology, or also, as we'll see later in the data, there are retail trade businesses, and retail trade businesses will tend to come up where there are cities and high density of population because there's greater demand for retail trade.
Okay, yeah, we'll dig into some of those industries in just a bit as to who is applying from what industries. All right, let's move on. So tell us a bit more about this study. Why is this study really important, Karma?
Are we still on the same slide, or?
I have moved on. I am about the Biz2Credit Women in Business study.
Okay. For some reason, my screen is frozen, so just bear with me for a second.
Okay.
Okay. I just I clicked away so I can see the same slide that everyone else is seeing. So as you mentioned at the start of our presentation, this is the 3rd year that Biz2Credit has done this study. I'm just going to lay the foundation a little bit about it, which is the study you mentioned is based on actual data, and that's really important because it differentiates us from a survey where we're asking people's opinions or people's sentiment. The type of data that we collect and use for this survey is from loan applications. It's also data on the health of the business, things like payroll, things like business credit, also the women's own credit and financial statements are taken into account. The study was based on 35,000 loan applications from both male and female business owners. And then the findings that we're going to be talking about today about female entrepreneurs is based on about 10,000 applications that we received on our platform.
So that's a sizable number. That's a lot of data there going into this.
Right. It's a meaningful study because the numbers are so large. We can take these to be kind of indicative of trend.
Excellent. Okay, let's move on to slide 10. So tell us a little bit more about what you learned from this study.
Right. So out of the 35,000 companies, we found that women-owned businesses have increased by about 12% in year-over-year comparison. So as we just said, we've done this study now for 3 years running, and 2015 compared to 2014, we saw a 12% increase in women-owned businesses. The average annual revenues and loan approval percentages for women-owned businesses have increased, and 130% more women-owned businesses applied for credit in 2015 than 2014. And that is a meaningful uptick, but underneath that, we want to understand why they've done that and understand also whether or not that's always a good thing. So overall, this year's Women in Business study has uncovered some really promising and positive outcomes and also uncovered some continued challenges.
All right, so moving on to slide 11. So tell us about how the women-owned business revenue stacks up. So these are basically equivalent to sales numbers. Were you surprised by these numbers, and just walk us through them, please?
Sure. So the revenues have gone up, which is good. It would be ideal if we saw them increase even more, but still this is a really good start. And part of that is probably being buoyed by the overall economy that we're seeing this. What you can see from this study, though, is that the male-owned businesses are making almost $100,000 more in the same period. And so that's something that we might want to consider when we think about the types of underlying businesses that you know are being covered by women versus covered by men, because it's possible that men are selecting for businesses where they have greater pricing power.
And I want to ask something about these numbers. So we see that in 2015, women-owned businesses, the average annual revenue is $142,000. In one sense, that seems, you know, not like it's certainly not a gigantic business. And even the men-owned businesses are $229,000 in annual revenues. I mean, that suggests to me something positive in the sense that you don't have to be a very large business to get funding. You can get funding for a business at a relatively early stage, relatively small business in order to grow larger. Were you surprised by those numbers, or is that consistent with what you know in general?
I would say for both the male-owned and female businesses, these figures are kind of consistent with what we know about a lot of small businesses. There's kind of, you know, there are different flavors of business out in the world, and many people in small business, in the small business space, will start businesses because it's a lifestyle thing. They are a sole proprietorship, or perhaps they have, you know, under a handful of employees, and they really run their businesses because it enables them to do something that they're very interested in, or something that they're good at, or those types of things. So to your point, it's not necessary to start a business and grow it to be, you know, a billion-dollar entity. You can grow your business to be the type of business that you want it to be, and certainly get credit at any stage in the development of the business that helps you grow to where you want to go.
And so lenders are really interested in businesses of this size, and I think that's a positive thing, isn't it?
Yes, it's an incredibly positive thing for small business owners in general. And you're absolutely right, it's a great point to bring up. Lenders really are interested in these small businesses, and we see trend all the time. We're in conversations with banks all the time about their desire to be connected to businesses that are of this size.
Great. Okay, well that's good. That's good. We wish businesses were, getting more revenue if that's what they want. But on the other hand, I think it's really positive that you can be the kind of business at whatever size you want to be and still be of interest and some attraction to a lender.
Right. The challenge for lenders, yeah, I was just going to say, we have a slide on it later on. The challenges for lenders are that they need greater transparency so that they can feel comfortable that the small business will pay them back. But they really like to invest in small businesses. They just need a level of comfort, and that comfort is driven by having a greater level of detail and awareness about the business. And that's something that our platform helps provide, and that's why so many businesses are able to get funding through the platform.
Very good point. Okay, well let's jump to slide 12 at this point. So let's talk about the earnings, and I would say in the context of a small business, this is roughly equivalent to their profit. Is that right? Mm-hmm. So when we talk about annual earnings.
Yeah, exactly. And so the earnings, what we're seeing is the average earnings have gone up. They've not gone up by the same amount, though, as we saw revenue go up. And that's kind of an interesting data point. So if you wanted to flip back to the prior slide for just 1 second, we can see, you see that the increase from 127 to 142 is more steep than if we go forward, than the earnings are. And what that suggests, if we take those two data points together, is that profits are not increasing at the same rate as sales. And so that's kind of an interesting thing for us to think about in the context of lending and in the context of getting funding for a business. So the reason that we want to look at that is because when banks are thinking about giving lending, one of the things, or giving lending capital, one of the things that they are looking at is the profit margin of the business, and they look at that margin, which is really a proxy for the ability of the business to pay back the loan in a timely fashion. And so that's why ideally we would see the rate of sales, the gap between sales in terms of year-over-year increase, be very closely mapped to an increase in earnings. And we're not quite seeing that. So that suggests that the profitability we might want to figure out how to get that profitability up a little bit.
Well, one observation I would make and ask you about is that in a way this is actually positive just to see these earnings numbers, because I didn't do the math, but I'd say roughly we're looking at about a 50% profit margin here. And when you compare that to larger businesses, that actually isn't all that bad. When you consider a small business being able to retain almost 50% of their revenues. I don't know, you may consider that something as, not as positive as I do, but in one sense that is a positive thing that speaks well about small businesses, that you can start a business and you can take home more, retain in your pocket more, because you may have a higher profit margin than a large publicly traded corporation.
I wish we were in the same room right now because I'm smiling a really big smile. I think that's a great takeaway from this, right? And it's a really, for the people who are on the call who are thinking about whether or not they should get into small businesses, it's a great point to bring up, because a lot of times people shy away from starting their own business because they're a little bit risk averse about it. And you're bringing up a great point. And I'm focusing on the growth rate and wanting to see the earnings map to the revenue. But your point is spot on. People can drive revenue and retain more of it and have the freedom of running their own business and the sense of satisfaction and self-worth that comes from that as well, which is a non-monetary positive.
Yes, absolutely. Well, let's keep moving then. All right, I'm on slide 13. So tell us about credit scores, those all-important credit scores.
I'm pausing because I've got to flip back to my own slide again. So yeah, so annual credit scores. Now, when we talk about annual credit scores, first of all, I want to emphasize that for males and females, we're not seeing a big gap here. It's only about 15 points different between males and females. The other thing to keep in mind is that a higher credit score than 600 is much better. And in fact, anything below 650 is by many banks considered to be quote-unquote subprime. So when we look at these numbers, we would ideally like to see them well north of 700 for a really healthy business. The reason that we're looking at, and the reason that credit scores are important is because obviously they factor into a bank's decision to provide financing. And it's not only about providing financing whether or not they will or won't, it's also about how much they're going to charge for that loan, the rate of interest. So the higher the credit score is, the better rate you get. And when you're running a business and having to service that debt, it's much healthier for the business to have the rate be as low as possible. Just like a home mortgage or anything else, it's always better to have your monthly payment be lower and to be giving the bank less money for that loan.
Mm-hmm.
So go ahead.
And so we have the average being, you know, what you might consider fairly low, and as you point out, you know, it's actually subprime territory, which means that those who get a subprime loan or some kind of financing are going to pay more for it because they're perceived as a bigger risk. But on the other hand, they're still able to get financing, which I find very interesting. So there is money out there. You shouldn't be discouraged just by a number. You just may have to work harder. Is that the idea?
Well, yeah, and you bring up a really good point. So we actually have a number of financing partners that we work with. So Biz2Credit is its own platform, obviously, but behind the scenes, we also partner with other lenders. And so there are products that we're able to provide across the spectrum of quote-unquote credit worthiness, right? The people who come in on the very high side and people who come in lower than the 600 range. And yes, that capital can cost more. The underlying thinking is that if the capital costs more and your business really needs it, you'll just want to make sure that you pay it off quickly so that your business stays healthy and you don't end up, you know, having to pay too much for the capital that you need at the time. The funding is always available, though.
Yeah, that's a really you know, that's a really good point there. That, you know, the funding is available. Knowing where to look for it, if you have a credit score that is, you know, not the highest, is going to be key. And you know, making sure you don't get discouraged before you start.
Right.
Anything else on credit scores before we move off of this slide here?
Yeah, just one last point on that, because you said something great, which is you said, you know, making sure that you don't get discouraged before you start. One of the really great advantages about something like the Biz2Credit platform is that it takes all of the information from someone who's applying for a loan up front and then kind of does the search for them. So the loans that are right for that person and their circumstance and their particular need will all be returned, and the options are returned at once. And that's really key for small business owners because, and we'll talk about this again at the end, but to your point, just when you said, you know, people can get discouraged if they're looking or they don't even really, they don't start down the path because they're concerned about their number. The value of a platform like ours is that it captures a lot of different types of data. And although we're talking about the credit scores and we place a lot of that value on credit scores as a society almost because we think about them like a personal credit score. And although those factor in for a small business, they're only one of a very long list of things that a bank looks at. They're going to look at a bunch of different elements about a business, not just the credit score. So we shouldn't place too much weight on that. And a full platform that can take in all of the different aspects of the business into account and communicate that to a variety of lending institutions so that the perfect matches can be found, that really can help small businesses find what they need.
Yeah, good point. All right, well, moving on to slide 14, because I just want to make sure we are able to get through all the material. Approval rates for businesses. Tell us about that. You know, what kind of approval rates are women seeing versus men?
Well, they're seeing lower approval rates and by a sizable margin. We think that one of the aspects of this may be that the default rate for women-owned businesses is higher than those of male-owned operations. And that has to do with some of the things that we were talking about, like the profitability and the types of businesses that we see women selecting for, focusing on things like retail businesses. And I think we have a slide for that coming up, so maybe we can go forward and
sure.
See if we see.
And just real quickly before we go, so that little graphic on the right that says in 2015, 1.25%, that's the default rate for women, and 0.66% is the default rate for men. Is that what those numbers are designating?
Yes.
Okay. All right. Moving on to slide 15. So we kind of have good news, bad news.
Yeah. So male-owned companies generated more than 60%, or 60%, this phrasing is a little bit awkward, but 60% more revenue. Average male businesses in 2015 were around 229, and the average earnings for businesses owned by men were, well, that's a typo. The average earnings for businesses owned by women were 117. And then the credit scores for women entrepreneurs were a little bit flat and slightly lower than those of men. And so what we saw were that their approval rates were lower than male-owned businesses. We also saw that the average age of the business was about 35 months for female-owned and about 45 months for male-owned. And that's another factor for whether or not a bank will provide funding. And there are a couple of underlying reasons for that. One, it takes about 3 or 4 years for a business to mature and really start to see revenue gains. So they gain revenue more quickly over time, and we saw that in some of the earlier slides. And there are a number of reasons for that. Less healthy businesses will tend to close earlier. So those businesses that are able to sustain themselves over time will win in a competition because the competition starts to fall out. and they start to capture greater share. They're also learning over time how to run their business more efficiently. And so we start to see their revenues start to increase around the 3-year mark. And that is a factor that banks know that if a business has been in business longer, they're going to start to scale up their revenues, so that becomes another decision point for them when they're evaluating whether or not to make a loan.
Okay. Good
Yeah.
point. All right, we'll move on to slide 16. So what are some of the challenges that small business owners face? I mean, I think we know, but in the context of lending, what's the crux of some of the issues?
Yeah. So we have in the center of the slide lack of transparency. The banks want to lend to small businesses. They genuinely do. It's hard for them. Banks have been challenged over the last several years as well. They've closed up a lot of their, anyone who's in any city in the country has seen that a lot of banks have closed a lot of their locations. And so it's harder for the small business owner to find the right bank, and it's harder for the bank to find the right small business owner. And when I say right, they're looking for these different criteria. So at different times throughout, we've talked about the types of businesses where we see certain industries seeking capital more. For instance, retail businesses or restaurant businesses, hospitality, healthcare, and IT. Different types of businesses will connect with different types of banks, and the type of transparency that's needed is not always present or not always easy for small business owners to easily provide to the banks. So for small businesses who've gone to a bank, a brick and mortar bank, and attempted to apply, they know that it can take anywhere from 3 weeks to 3 months to get an approval. And a lot of that has to do with how much of the documentation that the bank wants they're able to provide, how much of it they've collected over time, and whether or not the bank wants any more, and how long it takes them to get them more. And all of those things, all that lack of transparency have created a gap in the market.
Yeah. Yeah, it's you know, it's an opportunity for those who can fill it, because you know, there is a need, and if you can reduce the pain in the loan application process and that whole process of getting funding for the business owner, you'll actually see more business owners going after funding too. I mean, it's really, in a way, it has a chilling effect on wanting to go after funding, because it just seems like, oh, it's going to take so long, it's so much work, it's you know, I'll go out and sell something more, you know, instead, and I'll just sort of limp along, you know.
Yeah, I mean, you said it, Anita. It's daunting. People get discouraged before they start. They might check their credit online and see their score and feel discouraged, or they might go to one bank and get told no, and not realize that there are 15 other banks out there who would say yes. So, you know, and things like gathering all that paperwork. If you're a small business owner, all those things take time. So if we want to fast forward a slide or two.
Yeah, so we've talked about the Biz2Credit marketplace. Do you want me to move to the next slide after that?
Yeah, I think so, because that'll be a little bit more detailed.
Okay. Yeah, tell us about the Biz2Credit process and how, I mean, this is really an example to me of a disruptive industry in one sense. I mean, in the classic sense, as they call disruptive industry, a marketplace, a platform that brings together lenders and borrowers for funding. You know, it's really turning the old model on its head, isn't it?
It is, and it's doing it at the right time. So what's happened is, just like for a lot of small businesses, who are experiencing disruption in their space, right, with online solutions. That trend can work to an advantage or the disadvantage of a small business. In this case, the lending space is really working to the advantage of small businesses. Today, a small business owner can go online to a platform like Biz2Credit, and because we call it a platform because there are a lot of different types of data that are all sourced by the platform itself. So instead of a small business owner having to go and pull together all of the different pieces of physical paper to prove that they're a viable and profitable loan-worthy business, they can come to Biz2Credit. They can set up an account for free online in just a few minutes. It's really a very small. They enter like 5 data points, and they've got their account started. Then there's a 2-page application that's fully digital. They enter their information, and they check a few boxes in which they give their permission for Biz2Credit to pull their information from a variety of sources. So Biz2Credit will pull tax information for them so that they don't have to photocopy their tax returns. Biz2Credit will pull information on their accounts receivable for them if that permission is given. Biz2Credit will do a soft credit pull, which is very important that it's a soft credit pull, because if a small business goes and applies for 3 loans at 3 different banks, what the bank will do is what's called a hard credit pull. When they do that type of credit pull, it can actually negatively impact the business owner's credit score. But a soft credit pull doesn't do that, and Biz2Credit does it only once. And so through this process where the small business owner comes in through the platform, they fill out a 2-page form, and Biz2Credit will digitally pull all the other data that's needed to connect that small business owner to the loans that are right for them. So it reduces the kind of the pain of the search, and it can provide in many cases an approval within 24 hours, and it can do funding. So we fund a lot of our own loans as well, but even if we have to connect the user with a different funding source, we can do that within 72 hours.
So that's pretty amazing.
3 weeks or 3 months. Yeah, it's incredible.
Well, you know, if you're running around visiting banks, you might not even get free enough to go around and visit enough banks, you know, for days or weeks, just to get started there. And what you mentioned about the soft credit pool, I think is very important. That, you know, not only is it more efficient for me as a borrower to go to one source, one place, and you put all my paperwork in, do one application, and from there, you know, get access to multiple lenders, but the very fact that I'm doing that isn't hurting me. It does not hurt me like it would if I ran around and applied to 6 different banks manually.
Yeah,
okay.
Absolutely.
All right, well, let's move on. I want to move on to slide 19. So we've really kind of talked about this, but why don't you talk about some of the final bullet points there? What type of financing can you get through Biz2Credit? I mean, we hear about all different kinds of loans out there, but mention a few, and what's the range of options out there for the business owner?
So yeah, we talked about all the advantages already, and then the type of loan will depend on what you need. So short-term working capital, people have heard me mention that a few times. That can be, you know, if you need to cover your operating costs for a very short time, that type of loan tends to be a little bit more expensive, but you only take it out kind of to bridge a gap, and then you pay it off. Equipment financing is another type of loan. So for instance, if you're going to open up a pizza shop, and those are very high margin, by the way. So if you're going to open up a pizza shop, the first thing you might need is a pizza oven or a couple of them. And so we can do that type of financing. Commercial real estate financing, if you're going to run a brick and mortar operation where you need to buy some commercial real estate. Also, for businesses that have been in business longer and have demonstrated a really good track record, we also offer SBA loans at lower rates through some of our banking partners.
And that's just some examples. I'm sure there are many other types of financing out there. And I guess the point for everyone to remember is whatever it is your needs are, you're going to have an option that suits you. Is that something, I mean, how do you determine what your needs are? Is that something that you talk with somebody at Biz2Credit about, or the loan, or, you know, how do you determine what the right loan product or financing product is for you?
We do have people at Biz2Credit who can help clients determine what's right for them. And we also, you know, for clients who have a pretty good sense of what they need, they're also able to be connected to that capital through the platform. So it really just depends on, some people work with lending consultants, and some people can go through the platform and determine on their own. So we have two paths for that.
Mm-hmm. Okay, good. All right, let's move on. I know we've got a question sitting here that we're going to want to get to, and I think maybe even before we get to the tips, I'd like to go back and pose that question. We were talking about roughly a 50% profit margin, you know, just roughly several slides ago, for small businesses, and how that was a good thing. But the question is, the 50% profit that you see may be good. However, is it enough profit for the sole proprietor to pay herself?
Well, it's a great question, and this question is from our audience. Is that correct?
That's correct.
Yeah. So yeah, that is a great question, and it really depends on the business, right? And this is, I've alluded to this many times as we've kind of talked. One of the things that we saw when we did this study was that a lot of times women who are coming to Biz2Credit for loans, this doesn't mean that this is what all women in the world are opening businesses in, but a lot of times they're doing, we're seeing them in retail businesses, like, you know, shops or delis or boutiques or restaurants. And so if you have 50% profit margin, but your overhead is high, you might not end up having enough take home to sustain you. And so, and that might be one of the reasons that we see more loan applicants for those types of businesses. So it's a really good point. 50%, what your margin is, may not necessarily be enough to live on. And so part of the financial analysis that needs to be done is, what do you need to live on? And then build up from that. And especially for not only established small businesses, but for women who are thinking about starting a business, the starting basis for the thought process and the driver for thinking about what you want, what type of business you want to go after, be what do you need to live on, and then what would your costs be, and then layer on top of that, what do your sales need to be in order for this business to help make you sustain your, you know, sustain your way of life.
And it's a bit of a chicken and egg situation, but unfortunately it's the reality, and it's this, that if you need more to live on and you've got a 50% basically profit margin there,
right,
you know, the reality is you probably just have to bring in more at the top line in order to have enough fall to the bottom line. Because in a small business, you often can't cut enough. You can cut to the bone, but at some point you just, it's not like in a big business where, you know, when I worked in a large corporation and the company needed to save money, they would go to all the departments and say, okay, everybody across the board, you got to cut 5%, and everybody would moan and groan, but you know, there was always enough fat in the budget that we could find 5% somehow. You know, we just cut back on travel, we cut back on conferences, we, you know, we just find, you know, we cut back on subscriptions, so on and so forth, and we'd find 5%. It's hard in a small business. You can't do that. So you really, your only option is to look at how do you increase the top line, and hopefully when you get your funding, you're using that funding on activities and you know, infrastructure or whatever that will help you grow that top line, because the reality is that's kind of all you can do sometimes.
Right. I really like what you just said. Sometimes if you know about your business, and we're speaking conceptually to our listener, if you know about your business that your costs are what they are and that you can't cut, then the investment that you take in would really ideally be for things like marketing that you know is going to give you a return, or sales efforts, right? Sales and marketing are the two drivers to increase top line. So yeah, that's a fantastic point, Anita.
Well, let's keep going, because we'll kind of have to quickly run through this because we're kind of down the wire. But give us some tips for improving your credit.
So just a couple things here, and we're going to make this presentation available so people can read these. The one I wanted to say, and we were just touching on it, is I put it in bold: prioritize making sure that other people pay you. I think, you know, I can speak for myself as a former small business owner. I didn't make collections my top priority always. A lot of times I would focus on running the business or focus on selling. You can have a lot of sales, but if people aren't paying you, you can go underwater, right? And so making sure that people pay you, and pay you faster than you have to pay other people. So if the bills are due every 30 days, and you've got, you know, let's say you owe $300,000, and you've got $1 million in revenue that's going to come in 90 days, but the $300,000 that you owe is due this month, you're in trouble. So putting a good system in place for making sure that people will pay you in a timely fashion is really key, and that helps. It just helps the health of the business to have money coming in more quickly than money goes out. And it seems intuitive, but it's easy to. Sometimes those can be hard things to prioritize, and that was the one that I wanted to call out.
Yeah, and you know, and also I would add, you know, establish credit, because sometimes small business owners don't have any business credit. So, you know, the easiest thing to get is a credit card for your company. So get it, use it, pay it promptly. Kind of the issue.
And don't use your personal credit for that. Make it a real business, and don't use your personal credit, so that the sooner the business's credit is established as belonging to the business, the sooner your own personal credit score and your own personal credit are less relevant, and also less at risk.
Okay, and we've got a URL down at the bottom of this page. If you would briefly explain what that is.
Yeah, so we have a Biz Analyzer tool, and once people open up so I put that link. Once people open up an account with us and they enter in their information, they can use what we call a virtual CFO tool and the Biz Analyzer tool, where they can test different aspects of their business to see how that would improve their credit worthiness and the likelihood of getting a loan. And so we really encourage people to use that as a free tool, because a lot of times, you know, small business owners don't have time to, create a bunch of spreadsheets or, complex math to run their business. They just need the answers that they need, and we supply that online to make it easier for people to focus on running their business and just understand the ratios that banks look at to give them loans.
Okay, good, good. All right, well, we are just about out of time. Any final comments, Karma, that you would like to add?
Yeah, just one or two, which is this is a topic that's near and dear to my heart. There are not only in our generation, but also in coming generations, a lot of young women who can run businesses, and there's no reason that a gender gap needs to exist. We just need to think about the types of businesses we go into, and I would say, a lot of times we're looking at these gaps, but there are real opportunities. And along with this presentation, you and I had some Q&A offline. There are some other tips that I'm happy to supply in the back end of this presentation as an FAQ to just help women to start to think about looking for those higher margin businesses, looking for businesses that can be virtualized so that you can keep your overhead low, kind of like you're doing, Anita, and looking for those areas where there are ways to be part of the disruption or ways to leverage the kind of digital opportunities so that women are riding that wave rather than having to fight against or compete with it. And so those are some thoughts, and I've got some little notes that I can share that we can post along with this presentation.
Yeah, that's great. I think the more tips, the better. So everything that you can provide, Karma, I think, lay it on everybody, because I think we all need all the advice, especially, whether we're starting up or whether we have an existing business, and we might be looking at possibly changing the business model or adapting the business, adding new business lines as we go along. Yeah.
Yeah, absolutely. And we can, maybe you and I can talk about that, and we can put together a document together, because I know you really get this space quite well.
Well, I'd be delighted. So where can people go to find out more and perhaps get started at improving their own credit and learning more about what they can do to get funding to grow their businesses?
Biz2Credit.com, of course. We have that URL there, and also this is our toll-free number. If people are interested in exploring loan options, they can give this number a call, and that'll connect them with a consultant who will talk to them about their business and find out their loan needs.
And it's free to set up an account and to have an initial conversation with someone, correct?
Yep, completely free. They'll help you walk through, or you can set up an account and use the application online as well. And once people set up the account, they can use it on their handheld, they can do it on their desktop, they can start and stop according to their convenience. So we try to make it as easy as possible and let people focus on just running their business.
That's good to know. Well, with that, I want to thank everyone for joining us today for today's webinar on the Women-Owned Business Outlook for 2016 based on the Biz2Credit study. Thank you, Karma Hara, Vice President of Biz2Credit, for joining us today and sharing all that great information and tips.
Thank you very much, Anita. This was truly a pleasure. Thank you.
Thank you all, and the webinar is concluded.